iRobot. To help us do that, I want to welcome in TD Ameritrade Network contributor Jenny Horn to the show. Good morning to you, Jenny. Let's talk this one. This is a fun name, and the products are extraordinarily interesting in terms of the Roomba vacuums. What is the chatter around this company heading into its earnings release?
Well, so for starters, this name is down about 4%. So kind of what we're just discussing. It's one of these names seeing weakness today ahead of their report. But I have to say a personal anecdote is there's so many interesting things that happen when we're working from home that you just, sort of can't predict. Like I have pets running around sometimes in the back of my shot. My iRobot Roomba actually frequently makes an appearance. It'll just start talking, of course, in the 2 minutes that I'm live. So this is a funny name because never ever would I ever predict that this name would, make appearances on Fast Market, but it often tends to do that. So this vacuum is near and dear to my heart because if you have pets or say children, or just really anything that, will help you make your life easier, this product absolutely rocks. And that's sort of the sentiment reflected on social media. But analysts are expecting very strong earnings this quarter, expecting to see year-over-year growth, with earnings coming in about 6 cents a share, which represents growth of about 110% year-over-year on revenue of about $261 million, which would show about 36% increase from the same period last year. Now, looking ahead, where this company really stands to benefit is from their solid product offerings, their demand, and also a very healthy supply chain, which we know isn't all the case across retailers across the board. Now, another thing is they've really focused these last few quarters on enhancing their technology through machine vision technology and also AI. So not only are they sort of the leader in this automated robotic space in terms of vacuums, they're also trying to be now the smartest in this space, I think, to sort of outskirt the competition. Now, for this reason, they've seen a few healthy quarters with the total revenues expected to grow to be about 1.63 to 1.67 billion for 2021, which would represent about 14 to 17% growth. So they are growing at a very healthy pace. Now, one significant headwind I saw across the board from analysts from Twitter is their gross margins. So they are expected to see this as a stressor in 2021 with the expected jump of 41 to 43 million in costs. A lot of this is due to the reinstatement of tariffs we're seeing from Chinese imports, but also just their increased costs of marketing, their increased costs of spending. And it's interesting, they've sort of, made themselves now an online company with about 60% of their total revenue generated from their e-commerce or other different sites. But they're also focused on growing their direct-to-consumer business. And so that has obviously taken some money. Now, instead of, operating through Amazon and all these different outlets, they are very focused on building their direct-to-consumer segment, which is actually expected to grow at about 15% of their total business this year. So I think this is cool because now you no longer go to, say, an Amazon to buy your iRobot Roomba. You're going directly to iRobot's website. But, the noise right now is super mixed. People do love this product. People love these vacuums. As I said, they make your life so much easier. So that brings me to our first tweet of the day, which says, iRobot is my favorite large cap at the moment. Chart looks great, and I'm thinking reversal this week. Now, I have to say, it's trading at about 104 today, falling over 4% today. So it is about over $90 off its all-time highs. So I think that makes a lot of people say, wait, with so many names near or at all-time highs, this does look attractive for that reason. But our next tweet sort of, counterbalances that because it's a little bit more bearish. So our next tweet says, while many people love iRobot's Roombas, I would question the extent to which iRobot is able to continue to out-innovate well-funded competitors and maintain their premium pricing. Manufacturing electronics hardware is a tough game. So just to paint a picture of some of their competitors, you have Shark, you have Ecovacs, you have Dyson, you have Vysol. This is a very saturated space, no doubt, although I do kind of think they are one of the leaders. It is a growing space. Now, I have to say there is a degree of loyalty, I think, since I have purchased an Roomba, and now I would say I'm more likely to buy the same product. There is that degree of somewhat of stickiness, but I have to say that, with people spending more time at home, this product maybe was even more beloved in the last year. But I love this product even when I go to work because I know that my home is still being vacuumed. So I do have to say, working from home, not working from home, this is a really phenomenal product, Kevin. So I only can see them continuing to grow for the long term.
Jenny, it's amazing that this company is 30 years old and still doing what they're doing. You know, if you look on their website, they consider themselves a mapping and navigation company as much as they do a broom and mop company. But no one even talks about the mop, the Brava, that sprays, you know, the liquid and then cleans it up. So there's a lot of things going on, but you mentioned, I think, a key part of their business model going forward, and that is direct to consumer. Much like Nike that we've reported on and other big companies, direct to consumer just goes right to your margins and improves them on a general basis. But, you know, this company is an interesting one. I looked up the Roomba 980, which was named the best of best. That goes for about $900. Jenny, that is an expensive broom, Jenny.
I would buy it, I think.
Nearly $1,000, guys, for a vacuum. And we're talking iPhone prices, which is interesting. But the one thing I will say here, Jenny and Kevin, is 114.8% to the upside is more people spend time in their homes. They want a cleaner home. Maybe there's a clear correlation there, but they don't want to spend that extra time to push the vacuum themselves. But Jenny, we got to leave it there. Great stuff as always, and thanks for joining us. I want to welcome in LikeFolio's VP of Research, Megan Brantley, to the show here to talk some iRobot and dive into this social data behind this company. Because Megan, as I take a step back, you maybe take out that period in January and February where maybe this was kind of caught up in the Reddit trade a bit, and you see some pretty extraordinary volatility. This looks to have been a steady rise that goes back to the beginning of kind of the COVID period. However, my question is this a company that has the staying power to go forward, or is this a company that's a little bit more like maybe a Canada Goose? Once you have one, maybe you got it as a gift, you don't replace it.
Yeah, that's a really good question. And so we have a couple of different ways that we can look at iRobot. And to begin with, the first thing we do is we listen to just mentions of people buying an iRobot, buying a Roomba, buying a Brava, like Kevin talked about. Kevin, believe it or not, that's actually the brand showing the most strength in our data. It's actually up double digits year over year in terms of demand. But in contrast, the iRobot and Roomba itself, they aren't showing as significant year-over-year strength. So when we look at this comprehensively, these purchase intent mentions are starting to normalize. So whenever you're looking at a chart, it's interesting because this is a pretty seasonal name. You oftentimes see a lot of people ordering this around Christmas as gifts. It sounds like a pretty expensive gift by the price that you cited earlier to me, but this is something that people start to splurge on around the holidays. So we're used to seeing this seasonal bump. Last year around this time, we started to see a kind of unseasonal bump because people were stuck at home and they were really aware of, oh, wow, like I need to keep my house clean because I'm here in it all the time. And now I have this higher, desire to keep things clean. And so here on this chart, that green line, those are those demand mentions I'm talking about. And you can see these typically spike around Christmas, but last year leading up to April, you see this second bump. And that's what's causing this a little bit of a tougher year-over-year compare that we're entering right now. So we're definitely seeing demand normalize, especially comparative to that unseasonable surge that we saw last year around this time. So, heading into earnings, we don't really have a significant edge. We're coming up pretty neutral because yes, demand is still there. However, it's not growing at the same rate that it was growing last year.
$900 Christmas gifts. I hope my children are not watching this show, Megan, because there's no place in my world for a $900 Christmas gift. But Megan, if you were listening to the first segment of this show, yeah, I was talking about how LikeFolio's data has shown across the board with the names that we cover a spike during COVID, and then data settling at significantly higher levels than it was pre-COVID, right? So stickiness in some of these numbers. Isn't that what we're looking at right here as well? I mean, the chart for the stock shows that. It looks like the chart for LikeFolio's data pretty much shows that. It looks like it needs to hurry because it's descending as we speak, yeah. But aren't you just showing, a lot of data across the board, even at LikeFolio, resting now at higher levels than it was pre-COVID?
Yeah, I think that there's definitely a degree of stickiness here. And whenever you slice and dice what is the sticky part, it's the e-commerce element, which I think is kind of what you were getting at in the previous segment. When we look at these digital order mentions, we see those up about 12% year over year in the quarter that's about to be reported. So I think that that's something healthy that iRobot wants to do. You know, they want to see these upgrades. They want to see people coming back and ordering their next vacuum, or maybe they add on the Brava mop, which perhaps is what we're seeing right now and why we're seeing this strength there. But I think that is lower comparatively to the growth that we saw the quarter before. So the quarter before, those digital mentions, we had registered up about 26% year over year. So this is something where, as you mentioned, we see this surge, you see this, you know, this kind of uptick in activity from this event. And now there is a little bit of stickiness, but also a little bit of normalization. So digital mentions are tempering, but they are coming in higher versus pre-COVID.
And so along those, as maybe more and more have accumulated these over the last year than they previously had seen, you know, Megan, I can say anecdotally, I go into, you know, someone's home and I'm more likely to see one now than I ever was. I feel like maybe I just noticed it because I have one myself, but I see more and more of these now than I did just 3, 4, 5 years ago. And that's probably a credit to the success of this product. It's gotten better over time as well. Where does sentiment or happiness sit for this company as these products have constantly improved?
You know, it's interesting. Happiness is exactly flat year over year. It's almost at 70%. It's in the high 60s in terms of consumer sentiment. This is pretty good. I wouldn't say that this is necessarily outstanding. I think we also see a lot of jokes on Twitter. I'm sure that maybe you've experienced personally these things. The way that they operate sometimes and bumping into things, and I've seen them like loose literally on the streets before. You've got some of that level there. So I wouldn't necessarily say that these are genius products, but they're at least keeping consumers the same amount happy as they were last year. So that's definitely something, as you saw this surge in demand, that, you know, you like to see happiness pretty stable, but definitely some room for improvement there.
No, I think that's good. And so using this as somewhat of a baseline here, since you said that in general, LikeFolio tends to kind of fall neutral here on an iRobot. When I think of a product like this, and Kevin, I please, if you disagree, feel free. But as Kevin said, a $900 vacuum cleaner that really just does it for you as opposed to you pushing the vacuum itself. To me, this is the ultimate discretionary purchase, whether it's through a gift or buying it for yourself. You know, this is really kind of a product you do, or maybe you purchase when things are going well for you economically or financially. So if we're starting to see this falter off at all, is that a little bit of a sign that, you know, maybe the ultimate discretionary purchases are starting to fall off? Or is this maybe one that you have to look at as a bucket of other companies? And if you see that kind of trend go beyond just iRobot, that's a little bit worrisome?
Yeah, I think that we'd want to see this in a broader trend just because this is such a highly specialized product. I think another thing to consider when you look at our data, especially when you're talking about iRobot, is that, you know, we're capturing a lot of these English-speaking mentions, and I think the U.S. comprises about 52% of iRobot's mentions. So while the U.S. has been a growth driver for iRobot in general, we are starting to see a little bit of this tempering. So something to keep in mind, that there could be growth in other areas or there could be slowdown in other areas that we're not capturing. I think even Jenny mentioned too, there's the potential for tariff headwinds. We've noticed that sometimes we have a really strong signal and then we get smacked on earnings because of these tariff headwinds that the company cites. So I think that that's something that investors should keep in mind too. At least from our data, you know, whenever we look at demand, it's healthy. When we look at least consumer digital purchases, we do see those up higher year over year, but we don't feel like we have a significant edge, at least when it comes to this earnings event. Our earnings signal is falling at about a -3, which is about as neutral as you could get. So I wish I had more of an edge to give you guys as you form this trade, but our data is coming out pretty neutral for this one.
Hey, the data is the data, and we just have to use the information that we have. But Megan Brantley, it is always a pleasure, the VP of Research at LikeFolio.com. We look forward to talking with you again soon. Kev, you know, I think that